Hello everyone, once again welcome to my channel. My name is Praful Raj. My channel is about the insightful conversation with economists and professors about the Indian economy. Today our guest is Dr. Amol Agrawal. He's a professor of economics at Ahmedabad University. He has about 10 years of work experience mainly as an economist in the financial markets in Mumbai. He is an avid blogger and his blog is consistently ranked top 100 economics blogs in the world. Professor Amol also contributes regular op-eds on the India's microeconomics for money control, business standard, and means. So I welcome you, sir. Thank you so much for joining this call. So thank you so much, Professor Amol Agarwal, for to coming to my channel. It's a great pleasure for us to hear from you about your experiences in your corporate world, as well as a professor of economics in Ahmedabad University. So we know that today, everything is driven by tech. I mean, most of the things either it is directly used, it is indirectly used. So we will just talk a little bit about the Indian bank in context of technology. So what's your opinion? Do you think, like how Indian banks are adopting to global standards in technology processes, standards, and compliances? Second, like, do you think that India only adopts when it is get success in other countries, or like, we as an Indian bank also do experiments and take the best out of for the Indian consumers?
This is a sort of a interesting question in the sense that as I'm reading that today, earlier in when I used to be sort of working in the financial sector industry, financial services industry, technology used to be just one of the departments. But today, technology is banking, banking is technology, the way it is. And obviously, there's a long history, uh, and since I'm a student of history, banking history, so I would just sort of spend some time here. So in the 1980s is when we started looking at technology, started looking at computerization and introducing computers in the banking industry under Dr. Dr. C. Rangarajan, who was the Deputy Governor at the Reserve Bank of India.
Yeah.
Under his chairmanship, there was a committee which was formed. In fact, Dr. Rangarajan has explained some of these things in his book, which he just wrote uh, at the beginning of this year, a very interesting account of the 91 reforms and his days as a policymaker and so on. And at that time, obviously, computers were just coming up. They were just, and since India was largely a public sector bank driven economy, so there was obviously opposition to the computerization, just like anywhere in the world, wherever computers have been introduced. Humans, though humans have introduced computers, but humans
Yes.
have opposed computers, saying that it will take away our jobs and so on. But then slowly and slowly, I mean, one can argue that initially we were simply adopting what others were asking us to do. Then the 91 reforms come, and we start with the new private sector banks, and lots of initiatives are taken. And after that, once the new private sector banks come in, they don't have any legacy issues. By legacy issues, I mean public sector banks will take time to introduce technology, and because they have, but the new private sector banks which come in, they come in with absolutely the latest technology which is available, and they are able to implement it. I remember, opening an account in one of these banks much earlier on, and I was very impressed with how quickly they opened an account, whereas public sector banks would take ages. I mean, you get
Yes.
documents, you get proofs, this, that, whereas simply a passport or even before Aadhaar card, they could just process it, and it was very seamlessly done. Uh, and then what happened is that we had this institute which the government promoted and the Reserve Bank promoted, called Institute for Development and Research in Banking Technology in Hyderabad, IDRBT.
Okay.
IDRBT, started uh, looking at banking technology in a very interesting way. It was a very interesting team of bankers, technologists, policymakers, and so on and so forth. And they kind of based it in Hyderabad, and they started talking about banking technology and started, thinking about what is it that the world is doing and what is it that we need to do. And gradually, this IDRBT, lots of bankers were trained there, and gradually, India, not just India, which was adopting some of the standards of what was happening in the world, gradually started taking the leadership role. In the sense that, firstly, uh, since India's politics, geography, everything is very different, multiple languages. So you have to also think about the fact that technology should make it very costly for customers. We are still a low income country, so there was some thinking had to go around on those lines. And I think one industry where we really took off, and we are now the leaders of the world, is the payment industry. I mean, as we understand that uh, uh, through IDRBT, then we had National Payments Corporation of India, which is not when I'm sort of saying these things, it's not purely banking,
Right.
but payments, and the way uh, Indian consumers today are making all these payments in a frictionless manner, from by developing QR codes, by developing the UPI, and which is completely transformed the way we look at payments and technology and banking. Uh, it's kind of very interesting that there was a time when we would go abroad and we would marvel at the fact that, look, it is so easy to kind of do banking and do payments. But today, the way we understand in during during the winter season, winters in India, when foreigners are coming to India and people are coming, families are coming, and all that, the way to differentiate uh, an Indian versus a foreign, somebody who's living abroad, an Indian living abroad or a foreigner living abroad. Foreigners obviously is easier to figure out, but an Indian living abroad is that Indians are making payments through their phones, whereas uh, foreigners or Indian NRIs or whoever is living abroad, people like you, would be still making payments in some cash or some card and stuff like that. So it's kind of very interesting the way earlier you could figure out that who are these guys coming from abroad to these developed countries. Today it is easy to figure out who are these guys from the developed countries who are coming to India, because this whole banking payments has the way it has taken off in India in the last 10-15 years is just amazing. And how seamlessly, and we've kind of uh, from adopters, we are leading the way. Lots of countries are talking to us, uh, and we are looking at some kind of a cross payment system through the QR code, through UPI, and so on. So it's a very interesting question and a very interesting way through which we were simply following the Western standards, uh, or wherever these technologies are coming from. And today we are leading. I mean, all these countries are coming to India and marveling, and saying that, okay, we want to implement some of these things in our country.
So basically, sir, you talked about like in the beginning that Indian banks has to need to balance between what the amount of expenditure the banking are doing on technology, so that ultimately the cost will be borne by the consumer only. Ultimately, in any forms,
Right.
interest rate and all. So now, as per your experience, do you think now we have sufficiently uh, infused technology in banking system, not only in terms of payment, but there are like processes that are set. So today everyone talks about UPI payment and all, but there are the processes which I will talk about, the fintech companies, the small fintech companies, that if there is a loan processing, so everything is done on like click of button. Of course, there are backend, the people are checking the documents and everything. So this is also been done and capturing the real time information of the consumers and whoever is taking loan. Is it that to the extent we have reached?
Yeah, I think so. We have come a long way. Uh, if you look at the fintech space in India, the number of fintechs which are there, which are enabling multiple things, in terms of whether it is getting loans, whether it is payments, whether it is uh, even the investments. So lots of apps have come up which are making it very easy for you to invest in stock markets. Earlier, you had to sign 100 forms,
Yeah.
150 form, 100, not 100 forms, but a form which had 100 odd signatures to open a demat account. But today, you just have to click somewhere, just download one of these apps, and they take your Aadhaar and some verification, and within just maybe a few minutes, you can start investing in stock markets. You can start investing in mutual funds. You can take an insurance policy. You can. It's kind of become. It's not just about banking alone, but the
Alone.
wider financial system. The
Integrated.
the the, the way
Integrated.
technology has made it, has seeped in, and has across financial services in India. Interestingly, a couple of days ago, I heard this talk by Dr. Tirthankar Patnaik at National Stock Exchange, who was at the university, and he was explaining how the retail investments have picked up big time in India in the last few years, especially after the pandemic. And there, obviously, technology has played a major role
Yes.
in the sense that it has become so easy to invest. So investment is obviously not just that you need your investment account is connected to your bank account, and then your investment account is connected to whether you're buying a mutual fund or securities. So it has to be seamless, right? If there are gaps here, then obviously investors are not very keen, right? Because these, as we in economics call them, transaction costs. The transaction costs of whether it was banking, whether it was insurance, whether it was investments, they were very high. I mean, it was very difficult for people to navigate through these things. So if your bank account is working right,
Yes.
maybe your investment account will not work.
Not
If your
working.
investment account is working right, there'll be something in the banking account. But today, these things have become very seamless. Yes, there are glitches here and there, but broadly, the overall experience is much more comfortable. Today, you don't really have to go to these bank branches, insurance offices, or so on and so forth. Lots of things are just done, made available to you over these apps, phone calls, and simply chatting to one of these bots and resolving all your queries. So it's that way. Not just about banking. I mean, I understand that whenever we talk about financial system, the focus remains on banking. But what we've done in India is that how do you bring all these financial services and the thinking and to make it a interesting, seamless experience?
Got it. Okay, yeah, and we like, of course, it has transit a lot, but it will take some more time to get into each and every step. Even the glitches gets out of this stuff. Okay, so coming back to, since I mean, you have an expertise in microeconomics as well as a banking industry, banking history. So I would point out the very important thing about the banking system is the non-performing assets. We'll talk about that. So just for the audience, the non-performing asset is basically, if you take a loan, if somebody takes a loan and that person is not paying the loan anymore, like that it's not being serviced, so bank, that's the bank loss. So basically that amount is called non-performing assets. So there are millions of dollars, I mean millions in INR currency, that's become non-performing asset. So the question is that, sir, despite the strengthening of Indian bank over the years, like why now also, why the country is not able to effectively manage or address the problem of NPA? So I'll just quote one number specifically. If we talk about the gross non-performing ratio of scheduled commercial bank, not all, but at least scheduled commercial bank. So in 2009, it was 2.3%, which is the gross NPA. And in 2009, it has increased to 7.5% in March. I'm not taking current figure because it might get distorted with the COVID. People might have not, but in 2019. So the question arises that what are the factors that is still contributing this trend? Because we today in this world, we know how the businesses are performing in real time. It's not that the balance sheet get prepared, profit and loss in till 6 months, 8 months. We know what's happening in the economy with the businesses. So what's the trend? And second, this percentage, so percentage might be misleading if we don't see in the term of context. So do you think this percentage is higher because of some big chunk of loan getting NPA, like SR Steel, sorry, Bhushan Steel, SR Steel? Of course, the part has been paid by them by going to the court, then the Reliance Communication, among others. So what do you think on this?
No, I mean, linking the earlier question on technology to finances or the financing of the bank. I think as we may uh, reflect on the fact that we are very technology sound. We have a very technology sound banking. Uh, as we were sort of improving greatly in technology, becoming the leader, we somehow forgot that at the end of the day, banking is about balance sheets and so
Yes.
on and so forth, right? I mean, giving your loans in the right way, and clearly, as we were rising in one segment of banking, we were falling in the other segment, and it's not very clear that uh, why is it that we got into this mess. I mean, we know the reasons, but why is it that the bankers and because now the overall banking activity is there is a lot of corporate governance which has come in. Most of these banks which we are talking about are listed organizations. So when you are listed in stock exchanges, there are lots of compliance regulatory norms, and you just don't have to comply with SEBI in terms of listing, but you have to comply with RBI in terms of your
Yes.
loans and advances, and there's uh, uh, a wide regulatory and supervision sort of a body. So where did these lapses happen? And the story, starts somewhere around 2004-5. Now it's also very interesting how banking history keeps repeating itself. Now we constantly are surprised that there are banking crises, but at the same time, as a banking historian, uh, it is it's like these stories keep coming in so regularly that as banking history persons, we don't know why is it so surprising. So and so 2004-5 is when Indian economy was doing very well. We started growing very fast. There was a time when uh, Dr. Rakesh Mohan in one of the speeches was saying around 2002 2003 that India's banks suffer from lazy banking, which means that bankers are not doing enough, and so on and so forth. And in a couple of years, he didn't use the word, but I mean, I'm using it. From lazy banking, it became crazy banking in the sense that our credit really started growing much faster than what it used to be, and because it was tracking the Indian growth story, where Indian growth story in that period suddenly kicks up, where we start generating 8.5, 9% sort of growth rates, which had never been seen before. And there was this big India shining moment, right? Just like we are seeing today, though we are constantly told that this is new India and all that, and shining India, but those sentiments were there even back then. And typically, banks started giving loans. Then the 2008 crisis hits you, and everybody's concerned. Globally, also, if you see, banks were giving loans and so on and so forth. And then the 2008 crisis hit. But in 2000, post 2008, as 2008 crisis hit, it was a temporary moment, and Indian economy recovered very quickly
Yes.
because of multiple reasons. Firstly, our exposure to US financial markets, the international trade was much limited. So apart from the confidence channel which hit us initially, we were not as badly impacted as the other. So we started growing very quickly. And as we started growing quickly, again the loan started growing. And what really happens is that this period is very interesting, which Pooja Mehra in her book Lost Decade has written about. That how is it that in 2009, when post the post the global financial crisis, you have the new government coming in, and which is minus. So this is UPA two, which is minus the left, as we understand, and stock markets on UPA 2's re-election, or UPA's re-election as UPA two minus the left. Stock markets hit a high. Everybody was expecting that India would do really well,
Yes.
and lots of things will happen. And we had so every the banks and so on and so forth again started. And another thing which happens is that needs another history episode. But what happens is that India had these development financial institutions which used to fund a lot of this infrastructure, construction, industry, and organizations like IDBI, ICICI, and so on and so forth. Now, what happens is that because of the 91 reforms and many multiple changes, these organizations, which were development financial institutions, convert themselves into commercial banks.
Yes.
And as India is trying to shape the in 2009 new India, or an India where infrastructure spending and all that started again in a big way. It was there in 2004, 2008, and again it starts to go. And in that process, what happens is that you started lending again, and uh, and these loans are from commercial banks again. And Most of this is coming from public sector banks. Uh, Having said that, even private sector banks are lending. It's not as if private sector banks are not lending. Though, if we compare the data, we do see that post 2008, it's the public sector banks whose growth is higher than the private sector banks. So clearly, the bulk of the infrastructure development and so on and so forth, it was falling on public sector banks who were funding all these projects related to infrastructure, related to steel, related to, and obviously you were giving loans to steel because some of those that steel production will go into other infrastructure related activities, right? And but then that's what happens when there is too much sort of confidence, too much, uh, when you start ignoring the basics. So you're giving loans without paying a lot of attention to what will happen if these loans don't come back. What happens if the government, which is making so many promises, does not really, those promises are not are, do not take shape, and that's what precisely happened. I mean, suddenly Manmohan Singh, who was handling the finance ministry, has to go for a surgery, immediate surgery, and the finance ministry comes to Pranab Mukherjee, and Pranab Mukherjee ends up taking some decisions which, interestingly, nobody criticizes at that point of time.
Yes.
Everybody sort of celebrates that this is a great budget and so on and so forth. And
Yeah.
then some of those decisions start backfiring in terms of backward taxation, and then you had this 2G
Scam. Yeah.
sort of scam, and 2G scam, coal scam, etc., which were not really scams because all they were saying is that it was an auction related issue. It was a procedural issue. Anyways, let's not get into whether it was a scam or not. But all these multiple events started to weigh on the investor sentiment, and everything which was expected to do well started to slow down. And now the banks are straddled with NPA. Now, so in 2013-14 is when this NPA story starts picking up. Uh, and then we have the change in the government, and then in 2013 we also had Raghuram Rajan, who comes as the RBI governor, and Rajan is not very happy with the fact that he was under the impression, or RBI under him was under the impression, that the true NPAs are not being reported. So they did a much more rigorous assessment of those NPAs, and and then as a result, the NPAs which were so we had something called asset quality reviews, and as per those asset quality reviews, the NPAs suddenly jumped up significantly,
Okay.
and that's what led to these problems. So uh, and today, and whenever you have a banking problem, it takes a long time because what you're saying is that, as you mentioned in your explaining what the NPA is, that it's a loan which is not coming back, and that the probability of it coming back is zero or close to zero, and as a
Yes.
result it becomes a non-performing asset, right? So all these loans, as we understand banking, all these loans go to these loans which are stuck are have gone to these infrastructure industries, and these infrastructure industries are not doing too well because they had also expected certain things to happen, and those things didn't happen. So whatever projects and whatever money they have taken, that's also stuck. So if that money is stuck, it's not going to come to the banking system. So then there's a elaborate process of trying to recover those NPAs, and then we didn't have a bankruptcy board, which came up, which comes up in 2017,
17. Yeah.
which leads to which means that uh, if I am bankrupt, or if I mean, there was no process for me to declare myself as a bankrupt, and then these banks and so on and so forth take care of the assets and try and recover money out of it. So then, so these things are all institutional fixes. They have taken their own time,
Yeah.
and
It takes some time.
I mean, what is very problematic in all this is governance issues. We've seen uh, some very senior bankers across public sector banks and private sector. In fact, much more in the new private sector banks, which were really the shining armors in and their leaders have come to be have not taken the right decisions, and that's really a more worrisome thing, because you would expect that the governance would be little better in these organizations.
Okay.
And so it's a problem of governance, imprudent policies, very exuberant about the fact that things will only go on forever, but then that doesn't happen.
So basically, I think two, three things that I got, I realized that first thing is that yes, in the beginning, in after global crisis, banks started lending once again so that it will, it will go to infrastructure and different, sector that will overall have a growth and will the public will get the benefit. But one thing that you mentioned that they did not think much about the future before giving the loan. They just, okay, steel or some any sector will do better, but how much it will do better, we don't have a such robust assessment, I think. That's why
Right,
a big chunk of loan got NPA. And
right,
second, so it's basically not the small businesses that are making much of NPA, it's the bigger chunk of loan getting which NPA, which is actually
absolutely.
impacts and increase the NPA as an amount. So do you think today
So
banks are doing a robust assessment of businesses also, not just to some extent, of course, there will always be improved prudent decisions will be taken, and that we cannot, we cannot control that, but at least a major segment of the part is taking prudent decision or judging the business before, especially the NBFCs and all.
I wish I knew what's going on, because uh, I mean, these are all things which one only knows with hindsight, that
Yeah.
things were not done in the right way. One would just imagine that after the series of problems in the commercial banks and cooperative banks, housing finance companies, non-banking. So it was not just a crisis which was limited to commercial banks, but much more widespread. So Reserve Bank of India and the government and other regulators have taken some steps. Reserve Bank of India has strengthened its supervision and regulation considerably. So one is just hoping that you know these things are being done with much more prudence. But then that's the nature of banking. As you also said that one you try your best, but you never know.
Yes.
So for instance, if one looks at all the fintech companies, all this startup, etc., etc. Now, uh, invariably, banks are involved in funding these entities. There would be some if banks are not directly giving loans, then banks might be giving some sort of a consortium loan where a couple of banks are coming in together, or banks could be setting up a subsidiary which is giving these loans or is funding uh, as giving equity or to loans. So for instance, ICICI has ICICI Ventures, which could be which is giving equity capital and so on and so forth. Now, if something happens to ICICI Ventures and so on and so forth, obviously it comes to ICICI Bank. So somewhere down the line, banks are directly or indirectly involved in lots of these activities, and we understand that any innovation which is to be done, it will have gainers and losers, right?
Yes.
So uh, and in that process, uh, if the losers happen to be larger than the gainers, then you end up losing money on the banking thing. So again, it's uh, it's not a very easy question to answer, that whether banks are doing the right thing or not in a country like India, which is trying to reshape itself as a developed economy going forward, and so on and so forth. These risks have to be taken,
Yes.
and these risks have to be funded. It is just that one needs to, uh, based on whatever has happened in the past, you be a little more conservative. You build more reserves, more provisions against these things.
Got it.
But then there will always be some cases which will go here and there and
Okay.
backfire.
So got it. So basically, yeah. So coming back to my next question, so which is kind of contradicting what we discussed till now, that even if we have a significant NPA, and there are other things also that goes in the banking system, but still, why Indian Bank remain strong and resilient despite the global turmoil? So do you think it is because we have a stringent reserve ratios, like capital adequacy ratio of Indian banks to be 15.9% as of now, maybe a 6-month bank? but RBI, according to the regulatory requirement, it should be 11.5. So do you think it's because of this kinds of ratios, like there are cash reserve ratio, then there are SLR and everything, or is it because we are taking less risk in terms of giving credit and other doing other stuff? That's why we have been we are like, on the conservative side. So what's the, or is it a mix of both? What do you think?
No, I mean, as we are discussing the Indian banking system and the technology in Indian banks, when one looks at the global picture, globally, as India was going through this NPA problem, the European banks were into a major problem. They've been running a very high NPA problem for a while. Countries like Greece and so on and so forth, NPAs touch 30% and so on and so forth levels, right? Uh, so we've seen really pathetic banking standards across the country, across the world, sorry,
But
in the
yeah.
last 15 odd years, where the developed countries, I mean, if you look at these two systems, financial systems, United States and Switzerland, these are the two iconic financial systems where anybody who's a financial services person would want to work either in a New York or in one of those Switzerland based entities. And both these systems take a lot of pride in the fact that uh, used to take a lot of pride in the fact that we are a Swiss financial system, we are a US financial system. But we've seen in the 2008 crisis and the recent 2023, 15 years later, that both these systems have serious weaknesses. And then when you include Europe and so on and so forth, things are even much more murkier. Now, even in 2008, our banking system didn't really suffer any losses. And the part reason is firstly, Indian banks' exposure to foreign assets or foreign liabilities is much more limited. Likewise, foreign banks' assets and liabilities in India are very limited. So if there is a foreign bank which does poorly and so on and so forth, so foreign banks' overall share in Indian banking is about 4 or 5%.
Yeah.
60% is public sector banks, 30% is new private sector banks, 5% are the old private sector banks which were private banks which existed till 1969 to 1991. I mean, they're still there. Uh, and the remaining 4 5% is typically foreign banks. So foreign banks, and within these 4 5%, you have number of foreign banks is about 70 or 80. The last I remember, and just there are just two or three entities which are on the large side, and the rest are very small. They just sort of playing a licensing role. They're not really giving you loans and so on and so forth. So both foreign banks' exposure to India and India's exposure to foreign customers is very limited. So in that sense, foreign shocks don't impact us as much. Yes, there are these concerns in terms of stock markets going down and so on and so forth because stock markets are driven by sentiments
Yes.
and there is foreign portfolio investment money and there are always these concerns. But broadly, banking crisis in India as of now is homegrown. It's not really because of some foreign element. Uh,
Yeah, because
Foreign elements can have some. So for instance, if there in the 2008 crisis, we saw that there was a run on ICICI Bank,
yes.
and it was shocking that a bank like ICICI, but then it was quickly resolved because RBI came into picture. RBI said nothing doing. ICICI Bank is stable, uh, and so that happens to be one of those cases where uh, the sentiment because people thought that ICICI Bank's lending is very aggressive. It was very aggressive, as I was just explaining before 2008 crisis, and people thought that it could generate losses. But then that was not really true. So in 2023, particularly, we've done even better because of the fact that whether we like it or not, we had a crisis just before the pandemic, and as a result, Reserve Bank of India and multiple stakeholders they have taken some steps, some initiatives, tightened up positions much more, and in that sense, this 2023 crisis didn't affect us as much uh, this time around.
The basic point is the exposure. We have less exposure, and it's all homegrown. Of course, since it's a
Right,
globalization, few things, some
right,
percentage will come, but the thing is that overall, the RBI has a stringent laws which restrict Indian banks to go in such kind of issues and bankruptcy. So,
absolutely.
yeah, yeah. No, I mean, That's why, and considering we are a low income in country, if this kind of crisis happens every 10-15 years, then I think it will be very bad for in terms of other microeconomic aspects of it, of the country. So now, so there is one open-ended question for you, Professor. The first thing that, which is in context of today's scenario, we are seeing like global economies are having a problem with inflation. It's because US and Europe, I think it's because of more of a demand push inflation. It's more of a demand push, and of course also the supply side inflation. But in terms of India, we know that during the COVID, the money spent on by the government was less compared to other industry. Okay, so it has the both impact. The inflation did not grow so much, but still we have inflation, and simultaneously less money was pumped in the economy. The growth also is not too high, but it's a moderate, you can say stable. So what's your opinion on the current situation of inflation and growth, and how it should be weighted, in term while framing policy only in context of Indian economy? What do you think on that, sir?
Uh, it's kind of very interesting that in all these years of doing research, uh, I couldn't ever anticipate that India's inflation would be lower than developed countries' inflation. I mean, and we are almost in. I mean, and this was just not just a 1 month phenomena, but almost close to 10 months, 11 months. We saw India's inflation being lower than United States, lower than some of these developed countries, uh, and that itself tells you how difficult or how exciting last 15, 16 years have been, where every most principles or most facts, most things which you understand will not change, right? We never imagine that interest rates could go to zero, interest rates could become negative. All our textbooks today are
Yes.
talking about positive interest rates. There's hardly anything which is talking to you about zero or negative interest rates, and zero or negative interest rates not just for some little time, but for a long period of time. Likewise, we always thought that inflation could be created very easily by central banks. But from 2009 to 2010 to 19, we saw most of these developed countries having very low inflation. It was a problem of low inflation than high inflation.
Yes.
And just another puzzle which is come up now is that how is it that India ends up having lower inflation than the developed countries? And I would slightly, differentiate between demand pull and supply push. Uh, I mean, both these factors are involved here, but it is largely because of the firstly the pandemic, which created shortages. Inflation had started rising in 2021, but because of the fact that countries were still having very low growth, so central banks did not do enough. And then this Russia-Ukraine war comes in, which completely upsets the equations because suddenly, uh, after the war, Ukraine is a major supplier of food, Russia is a major supplier of oil, and in that sense, there is a supply shock, and we understand from basic macro that it will lead to prices rising
Go
up
up.
sharply.
Yeah.
And now, so typically developed countries have inflation targets of 2%. It was hovering at 4-5%, and suddenly inflation goes to 10% and 9
10%.
to 10% levels. Those are levels which these guys have not seen for the last 40, 50 years. I mean, the last time when you saw such inflation levels was the 1970s. And even 1970s, you had similar in oil shock, which led to inflation, kind of going up. So it leads to all these guys to, increase interest rates significantly. What is happening in India all this while is that, firstly, as you said, that really, uh, India didn't really, spend as much. So there's so much liquidity in the economy compared to the rest of the world was much lesser, right? And obviously, uh, again, just like the West is much more exposed to foreign shocks. Uh, we are exposed to foreign shocks in terms of oil, uh,
Supply side,
but food,
more of supply side.
so which is what we are importing, oil and gas. and somehow we are able to manage the situation by getting oil from Russia and so on and so forth, which other countries have have not agreed to. Uh, so uh, so this inflation problem uh, becomes a bigger problem in the rest of the world because of both the demand and the supply factor. In India's case, I think it is a lot of times, we may want to we may want we may think we understand this, but I still don't understand how is it that India's inflation is lower. I mean, there are, yes, the data is telling us it's lower, and one can talk about the fact that we manage the situation better, our agricultural situation better, and so on and so forth. But I don't really see uh, any any of that happening. I mean, I think it is largely a fact that in the West, inflation was not a problem for the last 12 years, and they kept stimulating the economy. And then I think all these things are, it was not just the pandemic, but even before the pandemic, the amount of stimulus the global central banks were giving to the economy, because inflation was low and you wanted inflation to come up. So all these multiple factors, and then the pandemic comes in, what was that stimulus becomes even larger, and in that sense, it has a significant impact on inflation. Whereas in India, we were much more muted in our responses because, firstly, India implemented an inflation target in 2016, and with our inflation of 4%. Before that, we didn't have an inflation target. So I think that has also kind of played somewhat of a role to the reserve, because Reserve Bank of India today, when it's making monetary policy, it is telling you where inflation is, and you're trying to bring it down, and you're making policies. So the financial media, economists working everywhere, they are tracking Reserve Bank's efforts in terms of bringing inflation down. So somewhere down the line, and we've always tried to bring inflation up, so our policies have been on the tighter side. Whereas in the West, since you're trying to bring inflation up, your policies are on the loose side for a long period of time. So these are, some sort of multiple factors uh, which have played a role in keeping our inflation lower uh, than than the rest of the world.
So it's basically like there is no clear cut answer of like the balancing between the inflation and the growth. It's like it depends on the situation to situation, I think. This is
Yeah, I mean, let me add to the growth bit. We were only looking at the inflation bit. As far as growth is concerned, India's growth rates have typically been higher than the rest of the world, uh, because of the fact that we are a developing economy. The catching of effect, as we understand from simple macroeconomics textbook, that basically countries which are at a lower income, and as they are investing, as they are spending,
ending.
so that same investing and spending will generate lesser growth in developed countries, because they're already at a higher level compared to developing countries like India, which are at a lower level. Right? And as our inflation, we've also struggled to bring our growth rates to 8-9% levels, which is desirable to push India into a into a middle income category, and from the middle income category, hopefully to a developed country and a higher income category. But then, uh, as the rest of the world has been in turmoil for the last 15 years, that uh, you know, even if it has not impacted our financial markets as much, even if it has not impacted our inflation as much, it has definitely dented our growth prospects, because you are part of the world economy in terms of growth.
Yes.
So your exports and imports and your investments. So today, any investor or any corporate investor uh, who's investing, you can't say that, okay, I am completely ignorant of the developed countries or the rest of the world prospects. If the rest of the world prospects are gloomy, then obviously my investments and so on and so forth will also be gloomy, right? I mean, it will not be as aggressive or as optimistic, and it is showing in data where the investments as a share of GDP is constantly declining. It touched about 38% in 2008. but today it is hovering at 30, 31%, 32%,
31%, yes.
and it is not really picking up. And it's only when that picks up is when your growth cycles and so on and so forth start to improve. So a mix of domestic policy and a mix of foreign policy has pushed our growth rates lower. I mean, we can celebrate the fact that we are growing at 6% as per IMF. The latest reading is 5.9, which is the highest in the world. But it is still, not really a growth rates which we were generating at 8.5. And at that time, we were second or third, second to China and third to maybe some other countries in that period. So that's what tells you that how much global environment is important for India's economic fortunes. I mean, we keep uh, saying that yes, our since we are globally less integrated, our financial markets are better off, and we keep patting ourselves on the back on that. But we are not completely excluded. I mean, and the global sentiments do weigh on the growth rates.
Yes, of course. Like
Yeah,
it
and
doesn't work in
IMF and
silos.
World Bank both IMF and World Bank both have come out with recent reports. They are arguing that 2020s is going to be the lost decade as per the World Bank, and as per the IMF, this is the slowest in the next 5 years. The growth projections are the lowest since the 1990s. So again, it is since
Same
you're talking
cycle.
about a weaker external environment, it will weigh on the Indian growth story too. And
Got
again, I mean, uh, India would want to have this period in its favor, and you would want the world economy to do better so that you can also do better.
Yes, I mean,
And in
yeah.
that process,
We cannot grow just growing ourselves. We need to it's
right.
a globalization, we know.
So
Okay.
that's another paradox, right? I mean, we've been
Yeah.
talking about many paradoxes,
Yeah,
and this is another paradox that, on one hand, sort of a less integrated economy helps us in terms of finance and inflation, but then more integrated economy brings us the growth rates, but it also brings us down. So how do
bring
you
us the shock. Yes.
manage? Yeah,
Yeah, I think till now, like RBI is of course managing and the ministry is managing much better. At least we are not getting shock and things are getting much better. So yeah, Professor, coming back to our last question. So this will be since this all these interview will be watched by graduate students. So we'll have one question for them also. So in your capacity as so many years of as a professor, so, what advice or recommendation would you offer to economic students today undergrad and masters, like how they best equip themselves in skills and knowledge, not in terms of only book? Because like I have also been getting too many questions, like what are the things that we need to do to upskill ourselves into this world of economics. It's not only macro and microeconomics concept, but it's tech is also coming, analytics is also coming, so and research is of course the traditional thing will of course be there. So what's your suggestions and recommendation for students there, especially in India? Yeah.
yeah. I mean, you know, let me just sort of answer this question in a little roundabout way. When you are, reading uh, marketing and branding, sort of not branding so much as marketing. The earlier scholars of marketing would say that there is only there are only three things that matter for marketing. It is location, location, location.
Location,
So
yeah.
obviously it was just one thing, but you were just trying to emphasize that. So if in economics, I think it is if there are three things that matter: reading, reading, reading. And here, reading, really widely, because see, your generation is coming into a time, or you are going to come in post your education. You're going to come into a time where there are multiple big changes happening in the world economy.
Yes.
Digitization is one. Climate change is another. Then the developed countries are facing a problem of demographics, right? So these three big changes, the way they are going to shape our society, and I mean, in our times, things were much more simpler in the sense that you didn't you were not looking at these big changes,
Big
right?
changes.
Today, an economic student has to understand technology. I mean, there is no, and technology, by technology, I think what we've done is we've reduced technology to simply coding and saying that, it's just data and R and Python. Yes, that is important, but that's not what technology is. The way you have to understand technology is the way it's shaping the economy, the way it is shaping businesses, the way it is shaping, the way we look at inflation, the way we look at growth, the way we look at uh, trading, and so on and so forth. So technology, as we briefly looked at in the first question, is making big changes in the banking industry, right? So you have to understand it in that process, that how is it changing the world of whatever sectors, whatever economies I'm looking at, right? Likewise, climate change. It's such a big problem. I mean, in the sense that so far, climate change cries, or climate change has been, we are constantly postponing the problem. But then we are postponing the problem because nothing alarming has happened so far.
Yes.
We, but that's the human mindset, that unless there's a crisis, we don't act. I mean, usually you say that for India, but I think that's a general problem
Trend.
all around the world. uh, Indians may be much more uh, you know uh, much more casual about things, but then I think it's a case of degrees of casualism. But everywhere else, you wake up to a crisis. It's not very different in the rest of the, and since no big major event is happening, despite we seeing some minor events all around us, we are not making those changes, right? But then uh, the way climate change is going to impact the economy. Now, for this, you can't just rely on econ textbooks. You
Yes.
can't even rely on technology alone. So you have to read about, the various climate sort of policies, and understand, just like you're trying to understand for technology, you have to understand how climate change is going to impact growth rates, how it's going to impact inflation, and which are the most sectors, or which are the most areas which are going to be severely impacted. Uh, then third, as I said, demographics. So what my larger point is that the generation, my generation, or my parents' generation, not so much my parents' generation, but my generation, we could afford to be very silo based. We could just focus on our things, and just let it be. And I think humanity also moved in that direction, where economics became just looking at these things, looking at micro, macro, and some econometrics, and data, and so on and so forth. But today, with all these multiple changes happening around us, you have to go back to your grandparents' generation, where interdisciplinary problems were the order of the day, and you were thinking in terms of interdisciplinarity, right? So you have to, in order to communicate across disciplines, you will have to read those disciplines.
Yes. So
Today, you can't think of making an economic policy uh, in a sort of in a in this environment without taking views of the climate scientists. And how can you converse with climate scientists if you don't understand their jargon, if you
yes.
don't understand what they are coming from? So in that sense, this is a time where you have to read, and not just read about economics, but read much wider, and read newspapers very regularly. I think uh, all my university students will be very irritated with this, if they get to hear this if get to hear this interaction. I keep insisting on the fact that you have to read newspapers, magazines very regularly, because they are telling you about these problems and these things, and then keep going back to your textbooks, keep going back to your things to connect those dots. So it's like uh, much wider reading is what I would call for.
Yeah. So reading and then connecting with the different concepts from the different discipline. I got it.
Right.
So yeah. So I think thank you so much, Professor. I think people who will be in listening our conversation hopefully will get about the banking industry, and students will get that reading is very important. So I think they will take that, and of course in terms of inflation and growth, they we need to do much more. It's a globalization, world of globalization. So here we comes to an answer. So thank you so much to coming to my channel.